Hi, and welcome to Crypto Info Depot, where we talk about crypto and beyond. All right, let's take a quick look at BTC, Bitcoin. We see that we are still in the downtrend. It's a descending wedge. It is also a head and shoulders. We've got the shoulder, we got the head, and we have another shoulder. So there's a lot of indicators that suggest that this is going to continue on down. But let's take a look at what it looks like today. All right, let's go ahead and zoom in here. We have something that is unusual. Now, in my last video, I talked about how we have to be super careful that this thing might go down and drop like a rock. But one thing that we do have going on today, anyway, is something called a 3 inside up. Well, let's read what a 3 inside up is here. This is the 3 inside up pattern. The 3 inside up pattern is a bullish reversal pattern. So right now we're going down and we're hoping for some sort of a reversal. This pattern is a bullish reversal pattern composed of a large down candle. Do we have a large down candle? Coming over here. Yes, we have a large down candle. A smaller up candle contained within the prior candle. Do we have a smaller up candle contained within the prior candle? Yes, we do have that. How about that? And then another up candle that closes above the close of the second candle. Do we have that? Here is the up candle that closes above the second candle. Ultimately, what we're looking at is a reversal, even though right now, as we speak, this one is going down. So possible option here is to take a bet on Bitcoin that it's going to go up and bounce a little bit before it goes back down. There's a lot of people that would look at this and dive right in, but I found this really interesting graph on Twitter by Coach K. And what we see here, this is fascinating, and it actually supports a lot of my thinking process as well. So our first high, days to the top, or not our first high, but this high anyway. So here's the first halving, and then it's 365 days, and we get a top. And then we go 396 days, and there's the bottom. And then we go another 518 days before we see the next top. Now, we'll note that there's a halving. This is the second halving. So between this top and the halving, it bottoms out and then comes back almost, it retraces almost to its prior level. And then we have the second halving. And at that point, it goes up and we see it's 518 days before it hits that top. And then it's another year before it hits the bottom. And then we have our third halving. But again, between the bottom and that third halving, we've retraced almost all of the gains from before. So there's plenty of opportunity to make money in this market. But then we have another halving, the third halving, and it is now suggested that this was the top. I know everybody in Plan B suggested that our top was going to go to 100,000, but it didn't. It went to 60,000, basically, 69,000. So if this is true, and this is the most recent top, then we've got about 365 to 380 days for it to drop down and hit its low. Now, the last one was 18 bars down, 16 bars down. If this goes 18 bars down, we're looking at somewhere between 17,000 and 22,000, that's a significant drop. Now, of course, we've got our next halving in 2024, and then potentially this thing will go up significantly after that. And frankly, it'll probably recover its all-time high of 69,000 within this time frame. This is one person's idea, and it's not really an insane idea, especially when you consider the fact of where we've come and how we got here. In my video yesterday, I talked about the stimulus. The pandemic stimulus came into effect, and that shot everything up. So we've had all-time highs, but now all of that stimulus is getting taken away. It's not only getting taken away, but it's getting vacuumed back out of the market. Now, we have an FOMC meeting today, and there's a lot of people that are talking about how it could potentially be dovish, and that perhaps the market has already done what it needs to do. They're probably right about the market having already done what they need to do, but my concern would be that if they're dovish, then potentially the market, including the stock, starts to go back up. Well, I don't think that the Fed really wants that just yet. I think probably what the Fed wants is for the market to hang somewhere in this area. So the idea of them being dovish doesn't make an awful lot of sense to me if they want to cool down the market. If they're dovish, there's probably going to be some kind of bounce to the upside in all of the markets. So we'll have to wait and see about that. Nevertheless, we do have this pattern here, the 3 up, but we also have this pattern here. So we've got right here what's called the cup and handle, at least in a way forming. So potentially we get a break to the upside from here, then that would probably constitute a retest, and it could be worth taking a position because it could go up here. Don't expect for Bitcoin to skyrocket. Bitcoin has lots of points of resistance. We can see all the lines that I've drawn here that represents the different points of resistance. So if Bitcoin goes up, it's going to find its resistance, it's going to hold. It'll find more resistance and hold. Now, I don't want to paint a picture of doom and gloom because it's very possible, if we go to our one-day chart here, it's very possible that Bitcoin could come all the way down to here. It could come down to 28 and it could hold at the 28. It could go even lower. But along the way, it's going to go up and down, and we will be presented with buying and selling opportunities. Right here, there were plenty of opportunities to buy the dip and sell the high. Buy the dip, sell the high. In a future video, we'll talk about how you find when to sell and when to buy, but that's it for right now. Hope you enjoyed this video. If you did, I'd sure appreciate it if you hit the like button, and if you want more of it, go ahead and subscribe. Thank you. Talk to you later.